Hello and welcome to Settling Up with Go Cardless,
where we settle the score with payment leaders,
get their honest opinions,
hot takes,
and no chargebacks.
I think I'm completely the opposite on all the answers that you have said.
But clearly we work very closely together. And that one will probably come back to haunt me in 5 years' time.
Exactly.
And fundamentally it comes down to, when is the last time you got the highest quality at no cost? There is a cost to free.
I'm Borja Valiente and I'm going to be your host today. I work at Go Cardless and I lead the sales team in EMEA. So our guest today is our very own Pat Phelan, who is currently my boss. Do you want to quickly introduce yourself?
Yeah, thanks for having me. Chief Commercial Officer at Go Cardless. Been at the business now 6 years. Started out as Chief Customer Officer, so have a reasonably good understanding and exposure to a lot of the challenges and themes that continually pop up in this space. I've been in tech for, over nearly 25 years now, which makes me sound like a complete dinosaur. But the marriage really of technology and payments, the combination of both over the last sort of couple of decades have really kind of solidified my views on a lot of things and made me quite passionate about this topic.
So today we are going to take a deep dive into the world of account-to-account payments, their rise in popularity, and what we have always felt at Go Cardless. Will account-to-account challenge cards? Pat, welcome to the podcast.
Thank you very much. Thanks for having me.
So to kick off things and to break a bit the ice, I would like to start with a game of approve, pending, or decline, which is our very own game of yay and nay. So I'm going to be giving you a sentence or a term, and I would like for you to basically say approve, which is green light, great idea, full speed ahead, pending, amber light, promising, but we are not there yet, or decline, terrible idea, stop that immediately. Got it?
I've got it. Yeah, this wasn't pre-approved, but we'll go for it.
Cool. So the term open banking.
I would say that is decline for me. Is it a one-word answer?
You can elaborate a bit.
Okay. Yeah, I think the certain connotations in terms of digital and the world we live in today where anything open has a little bit of a nervousness about it. So I would err on decline there, pending/decline.
Cool. Banks charging PSPs for open banking access.
I would approve that. I think the commercial model is a critical element to any adoption and any innovation. There has to be sort of two sides to every coin. And whilst I think the initial objectives were honourable in terms of ensuring that banks get involved and play ball and participate, I think the commercial realities will be what will either make or break over the next couple of years.
Yeah, I agree. I think it feels counterintuitive that we ask for it, but I think it's key.
I mean, we've been very active in terms of the conversations we've been having in supporting those sort of initiatives. Innovation usually and, some element of financial impact usually go hand in hand.
The next one is card networks investing in account-to-account payments.
Yeah, I would approve on that one. I think, I really believe in the power of the collective. I don't think this is a zero-sum game. Ultimately, the most important outcome here is that consumers get choice and that customers, merchants, businesses have the ability to reap the rewards and take advantage of cost savings where they want to and user experience where it's more relevant. So I think the more card networks invest in A2A as a payment mechanism, the better, because it's going to make it more and more prevalent. So yeah, we're in this game to really promote and develop and drive the adoption of A2A payments, and however that gets done is a win for merchants and customers at the end of the day.
Yeah, you said a couple of times now already, like consumer choice and consumer preference. Why is it so important?
Well, because again, similar to any scenario where you either have a monopoly or a dominant player comparable to lots of optionality, usually that drives a couple of things. From a consumer's perspective, it allows them to engage in whatever channel they're most comfortable with. You see a lot of the conversations right now about, different demographics, struggling in terms of even, financial options, banks closing, local branches sort of going out of business, everything's moving online. That's kind of the opposite, really, of what choice is. And I think from my perspective, it's just really critical that we never lose sight of that ultimately this comes down to our customers, consumers, and our customers, our merchants, having the choice to be able to use whatever payment mechanism suits them at a particular point in time. So I'll always advocate optionality. We play a role in that. Yeah. But it's a wider sort of ecosystem that needs to be leveraged. From my perspective, the key here is that the choice of account to account becomes more of a kind of a primary choice, or more of a balanced option, but definitely an option.
Yeah, so it's interesting what you said. I feel if it's a bit counterintuitive that we, as a payment company, ask the banks to charge for open banking. So again, like approve pending decline. But can you elaborate on why this is so important for you that banks charge?
Well, it's definitely a strong approve from my perspective. And fundamentally, it comes down to, when is the last time you got the highest quality at no cost? There is a cost to free. And usually that cost comes in a number of ways. Predominantly in our world, that cost comes in reliability, focus, and innovation. Unless there's a commercial model attached to this, why would anybody spend, hard-earned resources and company focus on something that is not going to generate revenue, fundamentally? I think the key here is that it's done in such a way that is equitable, that fairly reflects the benefit, and above all else does not add an increased tariff on consumers. But absolutely approve from my perspective in terms of that, despite the counterintuitiveness of the request.
Account to account as the future of payments.
Well, obviously I'm biased here, so I would approve it with certain caveats. I think it depends on how you define future. I think there's a role for everything. The question is more dominance and what impact it's actually going to have. So I approve, but it will, I think, always be part of a suite or options, which every consumer should have.
Cool. And now I'm gonna ask you a couple of personal ones to get to know you a bit better.
Yeah.
So getting to the airport as late as possible.
Oh, complete decline. I have wasted so many hours sitting at gates, but I'm always the first one on the plane.
Really?
Oh, 100%.
I would have guessed that you are...
100%. I hate traveling with anybody because they don't... well, they judge, for starters, and they're usually just way too slow. So no, it's a constant argument in my house because I have a family who think the opposite. So it's a struggle.
Rewatching films or series?
Oh, huge approve. The last 3 series I've watched, The Wire, The Sopranos, and I'm into Band of Brothers right now, which are so old.
Oh, that's good.
And I've seen them before, but classics, absolute classic. So yeah, complete approve on that one.
Hitting the snooze button more than once?
No, I'm declined on that one. I don't hit snooze. If I'm up, I'm up. No, don't hit snooze. Snooze gives you too many options.
I think I'm completely the opposite on all the answers that you have said. So that
clearly
explains our relationship.
Clearly we work very closely together.
Work.
Yeah.
Someone tries to call you instead of texting.
Yeah, that's pending, I guess. Initially would have been a decline because of just being, as long in the world as I have been. But as time has gone by, I can't remember the last time I picked up an unknown number on my phone, which is terrible, really, because it could be something that's important. But if you're not in my contacts, I'm probably, very reluctant to pick it up. But I should get better at it. Actually, I should get better.
There's a message for all the SDRs trying to call.
Yeah, exactly. That's probably part of the challenge, but. No, I tell my kids to be the opposite and talk to people more, and so I should really follow suit.
Thank you for that, Pat. So now moving on into the main questions. Pat, you've been at GoCardless now for over 6 years. What are some common and universal issues that you see businesses that you work with when it comes to collecting payments?
I think the core fact here is that businesses just spend too much time worrying about and acting on the collection of payments comparable to what they're actually in business to do. You know, as a business ourselves, our kind of raison d'etre is, you know, taking the pain out of getting paid so customers can do what they do best. And if you think about small, medium businesses particularly, time is an incredibly precious resource. And that's not a, you know, a truism or, you know, something that's on the, you know, a slide deck that you kind of go in and sort of just tout. It's the reality. It is the most precious commodity any business, particularly in this SME world, the SMB world rather, has. So I think what we see a lot of is the understanding that that's true, but sort of a lack of, I guess, focus on how to make that more efficient. And also the understanding of what the actual multiplier effect can be if you actually get that right. And, you know, the evolution into organizations like ourselves usually follows a very similar path. And that path is one born out of, you know, a lot of pain, a lot of stress. And ultimately, you know, customers get to the point where it's like, okay, this is not kind of something that we can carry on with. And I think, you know, from our perspective, our whole purpose is to help customers on that path. I mean, speaking myself, my own, you know, dad was a self-employed bus driver, very small business. And, you know, I recall many nights, weeks of stress from a cash flow perspective, because it wasn't so much about how much he was making, it was when that was actually coming in the door. And, you know, naively looking back on it, you kind of realize now, like the hours that were spent trying to figure this out was just hours that, quite frankly, could have been spent in more productive ways. So I think, you know, when you think about churn, when you think about failed payments, when you think about, you know, cash flow forecasting, all of these areas that just are the lifeblood of a business and the survival of the business in some cases, then, you know, that is the area that really we're in business, irrespective of the size of the organization, because obviously the impact's different depending on how up or down the sort of the chain you go. But really from our perspective, you know, I believe firmly that a payment strategy, even though it might sound a bit sort of, you know, OTT, depending on the size of the business you're in, is absolutely critical. And really helping customers to understand that is super important to us.
And a follow-up question on that, you mentioned trust. And
Yeah.
I know, like, we work with 100,000 customers, but I agree that payments is very important for every business. But how do you build that trust?
Yeah, I think, you know, from our perspective, we're very lucky with the regard that, you know, direct debit as a concept is pretty heavily trusted in the UK. I mean, we know the payment maturity is a term we use here in terms of like the confidence that consumers have in a payment mechanism, and direct debit is, I mean, we've pretty much in the UK had one since we were, you know, basically toddlers in shorts. Like every payment that was made to scouts or, you know, football clubs and things like that, like it's a very natural thing to do. So we've really kind of leveraged that and really built a mechanism around which customers can use direct debit in different ways. So not simply to collect payments, but also to understand their payments, to understand their customers, to understand their business, to give them confidence in terms of timings and optionality in terms of then how that money is invested, because the money is there and it's not spent, you know, chasing and following up and quite frankly, you know, just not really having a good insight into the dynamics of what their cash flow looks like.
Yeah, no, I think like that, what you mentioned, that win for the consumer, but also win for the business, I think is key. And I see it in a lot of conversations with prospects, with customers, that those people now, they are feeling way more comfortable at, you know, doing a one-off payment via open banking, safer, secure. You don't have to deal with a lot of errors that you have with the bank.
Yep.
And as you said, for businesses, they, rather than paying a 2-3%, they just pay a fraction of the cost.
Yeah.
So yeah, it's a true win-win. So Pat, what is it about account-to-account payments, like open banking, direct debit that you were mentioning, that makes them such an efficient way of collecting payments?
Well, at the basis level, it's direct, right? So, unlike credit cards, there are far fewer intermediaries involved, which from both a UX point of view and a cost point of view has a significant difference. The ability to instantly settle, the ability to engage immediately. From a merchant's point of view, we know statistically that the percentage of costs that are transferred through the intermediaries in the card networks is really significant, and it's becoming more and more of a challenge. And interestingly, because it's becoming more and more highlighted, maybe historically it was something that you just accepted. Now, I'd be pretty confident that most merchants, particularly most customers, are acutely aware of what that cost transfer looks like. And it is a tax. It's a secondary tax. So, the power and the efficiency that account to account can bring in this regard is very, very significant, because fundamentally it's money that you wouldn't naturally, or previously rather, have had, that you do now. Yeah. So I think that's where, I really believe that it's so critical that quality is maintained, when it comes to how banks interact with, PSPs, a company like ourselves. And the quality of that being driven by a commercial model that leads to, a proposition that's consistent, that's innovated on a regular basis, so that these savings and these kind of efficiencies can not just continue, but be accelerated, quite frankly.
And you mentioned, and we are seeing it, right, at Go Cardless, like every quarter, more and more companies are utilizing both.
Yeah.
Open banking for the first transaction,
Yeah.
And then future one-offs, but then direct debit for recurring monthly, weekly transactions. Can you touch a bit more on why we are seeing that uplift?
Well, I think from a payment option perspective, it's always been there, right? But it's been clunky, and it's been messy, and it's been separate. So if you imagine historically, the need to take a one-off first payment plus a follow-on direct debit it's not new. It's always existed. The difference has been historically that has to have gone through two very separate processes, from a credit card payment through then to something like direct debit. And those processes and those payment mechanisms have not always been linked. And that's been a major challenge. So if you think about it from a gym perspective, let's say, or a broadband perspective, or a mobile phone point of view, the risk inherent of opening and giving someone access to a service through a one-off payment, assuming that the follow-ons are going to legitimately happen, is pretty high, particularly when they haven't necessarily been speaking to each other or talking to each other or interconnected. So what we're seeing a lot now with account to account, and the ability to now have an option to take that instant one-off payment and have it highly correlated and directly linked to the ongoing direct debit payment option is really powerful. So again, a lot of the segments and sectors that we see that evolving in and adopting it pretty quickly are historically segments that would have had this challenge. We have a lot of scenarios, particularly in financial services, where the one-off payments are the first entry point, followed by the direct debit. And again, gyms are a really prime example of that, where you're giving access to the service for a month, let's say, or whatever it might be, through a single payment up front. But then and through a customer experience point of view, you're getting them to sign up in that flow for the ongoing direct debit. And using open banking through account information services, you can actually tell how likely it is that the balance is there ongoing, let alone sort of upfront. So I think it's really powerful. And it's really just the beginning of that.
So we are very excited about VRP, but what do these developments mean for account-to-account payments and the way that businesses collect payments?
Yeah, I think it's really around the further evolution of open banking specifically. So, the initiation of one-off payments into the sort of controlled element of the first rollout of VRP into the priority approved use cases, energy, utilities, charities. The next phase of this is effectively going full on broad. And I think, VRPs, as we would term them, commercial VRPs, is really just another option for merchants and customers to have in their payment toolkit to allow them the optionality of not incurring the tax that does come with credit cards specifically. Mm-hmm. So if you think again of some of the use cases of, the one-off plus the recurring, whilst right now we're in a very strong position to be able to do that through the direct debit rails mechanism, VRP is going to allow us to do that in a way that also competes directly with credit cards in terms of timing, in terms of settlement timing. So, in terms of the fact that we can do it in a almost instantaneous way, in a way that the consumer doesn't have to consistently, change, update their ranges in which, payments can be taken from, that we're not necessarily, constricted to any of the existing limitations in any of the payment mechanisms that they might use right now is super powerful. And it just strengthens the story, in my mind, around the value of open banking and the proposition around the value of open banking to the wider audience, I guess.
So you were mentioning greater focus and rise of account-to-account payment. There is actually a research by Juniper that suggests that the value of global transactions via account-to-account payments will rise by 230% to almost 6 trillion by 2029. We are also seeing some of the big card networks like Visa and MasterCard move more into, these account-to-account payments. So what do you think this increased investment tells us about account-to-account payments?
Well, fundamentally, when you see organizations like Visa and MasterCard investing in anything, you have to feel like you're on the right path. It's a little bit like AI at the moment. Organizations like Microsoft and Google, that's their primary port of call. I think this is no different. I genuinely feel this is no different. Because if you look at the evolution of any new tech, any new process, it usually starts with where we're at right now, which is adoption. You think about contactless payments. An anecdote that I love is, the adoption of contactless payments pre and post Transport for London, adopting it was something like 10, 15, 20x almost immediately. So I feel like this is not a whole lot different. And from my perspective, as we start to evolve what open banking is right now, as we start to mature in the knowledge of how we communicate it, and as customers become more trusting and aware of what that brand is and what it can do, I think you're going to start to see that really accelerate. Mm-hmm. And ultimately, what we look at beyond the segments that we serve right now and that we fundamentally can serve. Again, when you think about energy, utilities, financial services, mm-hmm. These are all very natural homes, but it's as it moves into those areas where customer experience, settlement, card maturity is really high, comparable to bank, that's, I think, where you're going to see the real sea change.
Let's touch a bit on that, because I think my next question is related to the movement of where open banking is going. For our audience, open banking has come a long way since 2018, but still at present, open banking mainly focuses on one-off payments, usually large value transactions. VRPs, so variable recurring payments, are coming, and the perception is that it's going to change how these businesses collect recurring payments. So commercial VRPs are not available yet, but are about to be rolled out later this year. So what does VRP mean for a company like GoCardless?
It's probably, for us, the largest significant change in the business that we operate since we began, really. There are some who see, variable recurring payments as a threat to direct debit. Mm-hmm. Then there are others who see it as an evolution to direct debit. And what I'm super excited about selfishly is that given the success that we've seen as an organization in the innovation around direct debit as a payment mechanism
Yeah.
and account to account as a payment mechanism, I think we're incredibly well placed to evolve over the next couple of years as variable recurring payments evolves. So, there'll be segments of our customer base where direct debit will always play a fairly large part. Then there'll be segments that will very quickly want to migrate to something like, variable recurring payments. We've already started to see it with some of our customers who have been the early stage adopters of variable recurring payments in its current iteration, effectively. Things like me-to-me sweeping. So financial services, again, those who have adopted have seen a huge kind of savings impacts. And then secondly, from a consumer perspective, really, really high levels of take-up. And as that evolves, so too will the overall proposition of account to account. And I think that's the really exciting thing about this, that account to account starts to evolve. And, from our perspective, it's just really important that ultimately we never really lose sight of the main purpose of this, which is consumer choice and consumer flexibility.
I really like the example that you use about TFL. And I think it's that combination of, the technology evolving, but also the trust that the public has in a payment method.
Yeah.
And seeing a big brand, which is quite renowned, offering those payment methods genuinely helps that consumer trust in the payment method. And we are seeing in the numbers, right, like the evolution that we are seeing in the UK with open banking.
Yeah.
So now moving to the $1 million question, will account-to-account payments kill the card monopoly?
I got to be very careful answering that one. That's a loaded question. But I don't think it will, being completely candid. I think it'd be naive to say it will. Certainly in the short/medium term. The card networks, they're ubiquitous, they're incredibly strong, they benefit from very, very high level of sort of payment consumer understanding, but it's almost like a double-edged sword now where that has resulted in a kind of a cost impact to everybody who engages with those networks, that cycle needs to be broken. So the way I kind of think about it is that I think we know that organizations who have anywhere between 3 and 5 payment options, transact at a more effective level. Consumers have more choice, and it's that aspect I think that the real opportunity is. So insofar as killing, I don't believe it will. Insofar as competing with, I absolutely believe it will. And up to this point, the ability to do that effectively hasn't been there. So if you think about things like card on file, for example, you don't think direct debit when you think about, your online shopping cart, for example. But commercial VRPs, as they now move into the wider realm of transaction scope and industries, is now really a credible competition to the use of cards. And that's exciting because that will kind of do 2 things in my mind. First of all, it will force the networks to think differently about how they view account to account as a direct competitor. And you're already seeing that with some of the investments that have been made by, the big network, MasterCard and Visa specifically in terms of account to account as another option. And that's really exciting from our perspective, but also from a consumer perspective. And I think really that's where the big kind of opportunity is. Now, there are barriers to overcome. There's no doubt about that. And as with any nascent sort of new technology, ultimately it's going to come down to a couple of things. I was on a webinar actually a couple of months ago with 11FS, as I think it was Open Banking Expo. And we talked a lot about what's going to accelerate, open banking, particularly as it relates to competition with the card networks. And really it comes down to a couple of areas. The first one is trust and understanding and consumer perception. I talked a little earlier about the contactless pre and post TFL. This is another example of that we've got to make sure that consumers not just understand what it is, why it's beneficial, but also trust that it's going to be secure, it's going to be safe, and it's going to basically protect their core assets. And I think the second one, which is an interesting one as well, is kind of partially the commercial model and partially the competition / collaboration. So, I see this very much from a fintech perspective as almost like it's not category creation necessarily, but if you think about it in technology terms, all the great companies, all the great organizations have really risen through the creation of a new category or a category that already existed and created a subset of that. I feel sort of similar with open banking, insofar as I think it's going to take a lot of collaboration with organizations like ourselves and candidly our direct competitors to help create and shape what this is before you kind of go at the opportunity. And that's going to be a really interesting dynamic. And then you throw the bank's commercial models in on top of that, where, people like ourselves and our direct competitors are trying to get the banks to want to take, financial recompense for the investment that they're making. Yeah. That's fairly new in a world where, everybody is really kind of trying to be successful and maximize opportunity. So I think that's the second area. And then from that comes the third area, which we talked a lot about, which is the innovation. If you're going to go down a path to force, and I use the term force in the best possible way, but to force a change in behavior and a change in choices that are quite embedded, you have to be able to deliver that time and time again. That cannot be a one-off hit. Mm-hmm. You can't have a great experience, here, and then it falls apart here. So the commercial models and the ability for that ecosystem to really get structured is critical in order to be able to drive that change. So I think those kind of things are in one way, shape, or form areas of focus. But personally, from speaking to our customers and the challenges that they face when it comes to this topic and theme particularly, that's pretty consistent. Mm-hmm. So I think, over the next period of time and with the inception of the new sort of government outlook on what this is going to look like, I'm quite hopeful. And that's UK only. That's very specific to the UK. And if you look abroad, I mean, you look at Australia is a prime example, similar-ish market dynamics, I guess, to the UK in terms of payer preference, in terms of a well-established direct debit, account-to-account ecosystem. The evolution of Pay2 there, which I think it's like 2030, where there's an expectation that open banking is effectively going to be on par or start to overtake a traditional sort of direct debit model. Like, that's very exciting. And then you look at the US, which is probably lagging, in terms of the innovation side of things. Credit cards very, very dominant, and I think will continue to be so. But you start to see the sort of the evolution there too. So I mean, I think it was a couple of weeks ago, the order to have all government payouts done through the real-time payment network. Like, I mean, that's they're big steps. Yeah. And that's pretty definitive, right? So checks go away and account to account all of a sudden, is in front of millions of people through one, executive order. So I think that's where the real opportunity sits. And I think it will be an ecosystem that will play more directly as opposed to card networks being as dominant as they are now.
No, I find it very interesting what you say, like how in order to drive real change, Go Cardless needs to effectively work with some competitors in the account-to-account and open banking space, rather than be competing against them. It's very fascinating. I wanted to touch. You mentioned barriers. So, what do you think are the main barriers for account-to-account, or more specifically, open banking adoption, that are currently present in order to properly challenge this card monopoly?
Well, we've obviously spent a lot of time in that area. We spent a lot of time working with different organizations just to really identify clearly what they are and how we can potentially create a lot of focus around it. We recently did a very significant piece of research with 11FS on this topic specifically. And there was a couple of key themes that were pretty consistent. The first one was consumer preference. and consumer understanding. If you think about even how, the brand, account to account, pay by bank, instant bank pay, open banking with a capital O, with a small O, like there's a lot out there. And for consumers to actually start to engage on something like this, I think as well as experience it, they have to understand what they are experiencing. So, when you see, even the transaction volumes from an open banking perspective, over the last couple of years and the growth in it, be very interesting to understand from a consumer point of view how many consumers actually understood that they were engaging in and on the open banking kind of process. I would say it's probably not enough for it to become again something that people go, oh, that was super efficient because of this, as opposed to that was just a nice experience because of the brand or because of the credit card that they paid their bill through. So that's kind of that is a really, really important one. I think the second one, again, to your point, is how we're going to view this category and how it's created basically from a financial perspective, from a commercial perspective. The concept of working together in the industry that we're in is an interesting one, given that there are other kind of variables at play. But I think in order to get to that point, we have to do this. We have to create something that is kind of consistent in both branding, terminology, processes, governance, and then the opportunity kind of just expands. But I think it's really important that we don't sort of lose sight of the wood for the trees kind of scenario here. The goal here is that open banking is adopted. It's adopted at pace, at scale, and it becomes a genuine competitor to the card networks. And every one of us play a part in getting to that point. And then I think the third one is definitely around the commercial models. Because without that, innovation doesn't happen. And without innovation and consistently evolving user experience, all the effort in the world to get a consumer to change what is a very deep-seated behavior is for naught. Because the second time they might interact, it doesn't work or it doesn't meet expectations. Like that feels quite a risk, if I'm honest, if we don't create that model that incentivizes everybody, both the PSPs, the banks, the companies that adopt open banking as part of their own payment options, and ultimately the consumers.
I think we need to educate the consumers, and that's our responsibility. I think what you were saying, I pay by open banking every time I have a chance, and you never have the same terminology, depending on the use case, depending on the brand that you're using, you will have different flows and different names. But I generally think, and you're seeing it, you mentioned the US, you mentioned Australia, in Europe the same, right? Like we are seeing in Netherlands, Ideal, an account-to-account payment network, getting more popular year on year. In Belgium, Bank Connect. In Spain, Bizum. So this is happening worldwide, and it's very important that we educate those consumers about open banking.
Yeah, agreed.
So thank you. This is the round of questions.
More
Thank you,
questions.
Pat. No, we just finished the round of questions.
Good.
We are now going to
So-
move to a little game that we have prepared for you.
Okay.
So it's going to be higher or lower. I don't know if you're familiar with the game.
I'm familiar. I watched the first series of Bruce Forsyth's Higher and Lower. I'm of a generation, Borja, that remembers the cards being flipped manually, not digitally.
Yeah, I don't remember that.
Yeah, there you go. I'd ask you that question.
But so for the audience, we are gonna. So Pat has to guess the answer to the following question based on whether they are higher or lower than the fact that I'm just gonna give you.
Right, okay.
So the first fact is worldwide payment card fraud losses reach approximately 33.83 billion in 2023. So is that higher or lower than the card processing fees paid by US business alone in 2023?
I'm going to guess that's lower, despite the number. I would think that's lower than the fees that are being paid.
Yeah, the number is crazy, but it's much lower than
Wow.
the fees paid. So the US businesses paid over 172 billion in card processing fees alone in 2023.
That's a big number.
Yeah, this is an all-time high and highlights for me the cost of accepting card payments for merchants in the US and worldwide that we have been talking about.
Yeah.
So the next statement, Pat, 4.6 billion payments were made via credit card in the UK in 2023. Is that higher or lower than the number of payments made by direct debit in the UK in 2023?
I'm going to go lower on that one.
You are correct. 4.8 billion payments were made by direct debit in the UK in 2023. So I think, again, like sometimes when you speak with prospects and customers, the popularity of direct debit is very, very strong in Europe, but particularly in the UK as well.
Yeah, it's a real asset. It is a real asset. And I think it's just, it's almost like in the DNA of this side of the world. I mean, I can speak from an Irish perspective, obviously growing up, but, you know, direct debit is just so ubiquitous with everything that you do, from the first point of even understanding what a bank account is. You know, the first direct debit that was set up is something you always remember.
Next one. So the statement is there are over 13 million million users
yeah.
of open banking
Yeah.
in the UK in March 2025. Is that higher or lower than the number of monthly open banking transactions?
I want to say that's lower.
Correct. The average number of monthly transactions is a whopping 22.1 million.
Yeah.
Which I think, like, again, we have been talking about it during the session today, but it showcases the trajectory of open banking and the rise in popularity.
Yeah.
Finally, I would like to get your future predictions on some interesting payments trends around the world. And we will play forecast or fixing. So you tell me whether these trends are something that you forecast to happen or in your mind they are completely fixing. The first one is, will cash exist in 2050? Forecast or fixing?
I'd probably say that's a forecast in certain areas, in certain sort of less mature markets maybe, but I think it will exist in some form.
Next one, will cryptocurrency go mainstream, hopefully in the next 5 to 10 years? Forecast or fixing?
I mean, you've got to say forecast, but it sort of it depends. Like what does mainstream mean? Like, I mean, if you think about it now, you know, it's so prevalent from a branding perspective, from a maybe not consumer understanding specifically in terms of the mechanics of it, but I think when you look at the kind of conversations I certainly have with you know, well, I think about my own parents even talking about crypto, it's just freaky really that they even engage on the topic. So I would argue that it is sort of in some context mainstream in the context of understanding and being out there, but I think, you know, quite honestly, not massively dissimilar to what we talked about in terms of open banking with the consumer perception and the trust aspect of it. I think that's always going to be a challenge.
And the last one, which I'm interested to take your view on, is, will open banking and VRPs replace direct debit eventually? Forecast or friction?
I think you'd have to say it's probably going to be a forecast depending on the timeline. Mm-hmm. And that's the key for me, because like fundamentally, you know, VRP provides an enormous opportunity to evolve direct debit, to allow it to sort of move into the next generation of sort of payment mechanisms. I think from our perspective, the thing that just excites me the most is we're incredibly well placed to be able to be at the heart of that. And we see some of the conversations that we're already having around it in some of the initial, you know, use cases that VRP specifically has been rolled out to. it's the evolution of that process from direct debit to VRP that's been really fascinating working with customers on, and how they see it and how they see the adoption of it in certain areas versus others. So I think you'd have to call that a forecast, because I mean ultimately, if it's to be successful and to be open banking in general to be adopted, you have to see it really kind of impacting and evolving that part of the ecosystem, as well as competing way more aggressively and way more on a par with the card network. It's kind of the two sides to that story, I guess. And ultimately, it's for the benefit of the participants and the consumers.
So for you, it will happen, but the question mark is
It's the timeline. I mean, you look at the adoption of anything, related to, financial services, relating to the core payment rails, like anything new is going to take time. And I think that's my hope really, is that we don't lose sight of that as an industry, that timeline may not be to the timeline that we would like it to be or we expect it to be, but to sort of acknowledge that there'll be peaks and troughs, but ultimately the end goal and the outcome remains the same. The timelines might just shift and change slightly.
All right, so we are done with the questions. Thank you so much, Pat, for coming, setting your insights, and settling the score.
Yeah, thank you for having me. You were easier on me than I thought you would be, given the opportunity, but really enjoyed it.
Easier than you than in the office.
Yeah, exactly.
Try to behave.
Yeah.
Cool. Well, thank you everyone for joining in, and watch out for the next episodes that we will have on Spotify and YouTube. Until then, ciao, ciao, adios, bye.